Do you watch Netflix? And do you share the password with your friends? Or do you use your friend's password? If so, don't do that because it's really hurting the stock. Anyways, welcome to the trade setup. Right here, I'm Neeraj Shah, and let's take stock of the market situation. I'm smiling a bit because it's a bit easy market today compared to the kind of volatility and mixed bags that we've had in the recent past. So first, the global news flow. Russia said that it test fired a new nuclear-capable intercontinental ballistic missile. In fact, Vladimir Putin apparently was on record saying that those who threaten Russia will now have to, uh, you know, kind of take cognizance of the capabilities that this missile apparently has. Then, in the Fed Beige Book survey, the US economy apparently grew at a moderate pace through mid April, but rising prices and geopolitical developments have created uncertainty and clouded the outlook for future growth. So, not the best of signs, if you will. Good signs, though, for Tesla, which reported better than expected quarter one results, which beat estimates with a record profit number. So, while at one end is Netflix, which is seeing users drop and profitability likely getting eroded, Tesla, on the other hand, is coming out smelling like roses. So that's the divergence that we're seeing out there. We had a FANG thing. Maybe that probably needs to change. And there is a actually before we get to the U.S. markets, can we show that very interesting chart that Virat has unearthed from the Bloomberg terminal, which shows how it is essentially been Facebook and Netflix, which have been, or Meta and Netflix, as the case may be, which have been the principal uh, companies, or which have been the only companies which have had a 15% or more decline over the years now. So if you see, it's been a number of times that Netflix has had these sharp drops and Facebook has had these sharp drops. Some of the others really haven't had done that. So it's quite a story, really. If you observe it very, very closely, you would know that these are the ones which are volatile from amongst the other FANMAG stocks, as the new acronym is. Anyways, the US markets, they did okay, reasonably okay. The futures are doing reasonably okay. So no complaints whatsoever. Like I said, a bit of a red on the screen, but reasonably okay. If you just, and why I say this, if you just look at what Asia is doing and what the rest of the SGX Nifty is doing, it will show you that there is largely a tick of green. Let me put it that way. And we had a bit of a bounce back, if you will, from those 200-day equal moving average levels yesterday. And I think it's looking like it will continue for the session today, or at least the start will be positive, which is actually not a bad sign. Now, keep in mind, um, the if you look at what the markets did yesterday at the broader end of the spectrum, you will, and the MOV function might show you that, you will see a bunch of stocks which did well simply because the market breadth was reasonably positive. 284 to 212 is a market breadth that you would take on any given day. And the list of gainers were spread across. So if there was MRPL which did well, or ACC which did well, Phoenix Mills which did well, uh, the Ambuja ICC twins, of course, continue. Like I said, Biocon on expectations of better than expected earnings did really okay. You also had an auto ancillary in Jamna Auto doing okay. And at the other end, there's some profit booking that you saw, for example, in a Bharat Dynamics or a Macrotech developers or some others. But largely, it was a day that belonged to the mid-cap end of the spectrum. So what's the trade setup there for a day? I think a move above yesterday's high of 17,275, if that were to happen, then that could signal an uptrend on the Nifty as per technical analysts. Now, I don't believe there's an uptrend in the Nifty. I still believe that there could be there should be caution. But the point is, I want to present you all the views, right, in an unbiased fashion. So I read 2 or 3 notes, all of which seem to concur that because we've taken a support at an intermediate 50% retracement level, and now we moved up in trade yesterday. If we move above yesterday's high, then that could signal a bit of an outbreak, if you will. And that, so until that happens, stay stock specific. If the breakout were to happen, then you could even take index positions, even on the upside, as much as I believe you shouldn't. But charts suggest something otherwise. In terms of pockets, while we've spoken about the usual suspects, what's happening to soft commodities, defense, etc., and all of they stay in play. But today, when I was looking at a bunch of brokerage notes, I saw auto stocks being firmly in favor. Jeffries, UBS, I think a couple of others as well, if I'm not wrong, have all spoken about autos. So maybe select auto stocks could be in the reckoning in the session today in terms of activity. So do watch out for those as well. FI flows continue to be negative. So another 3,000 crores sold by the FIs in yesterday's session. DIs bought about 2,645 crores. We'll be watching out for that. Today will be an interesting day for results in that HCL Technologies, amongst others, comes out with numbers. It'll be interesting to see what the third big boy from IT space has to do. In terms of stocks to watch, well, before I get to results, let's talk about Gland Pharma, because Nycomac Machinery is selling about 20.45 lakh shares, small stake, 1.5%, at a floor price of 33118, and therefore you could expect some bit of activity in Gland Pharma. So do watch out for that one. Then the results, and completely divergent performances from the two listed brokerages. So if Angel One, which in Q4, I've used QOQ numbers out here, but on such a strong quarter three base as well, Angel One, revenues up 12%, EBIT up 22%, EBIT margins expand even further, and net profit up 24%. It's a stellar performance by this one. And remember, at the start of the month, we brought to you a plate which showed the kind of subscriber additions that were done by brokerages or brokers in the month of March. And Angel One was right up there. The number one was Grow, I think, but the number two was Angel One, and some 1.57 lakhs or thereabouts. And compared to that, Zerodha as well looked a bit soft, but ISEC certainly looked soft. And clearly they're getting the customers, which is hopefully getting them, which is maybe getting them the kind of numbers as well, but really strong showing by Angel One. Won't be surprised if this one reacts positively today, and won't be surprised if ICICI Securities reacts negatively today. Revenues fell about 5.3%, EBIT fell about 8%, EBIT margin at 61%, so that was okay, and the net profit fell about 10% at 338. Now the EBIT margins certainly are much higher than Angel One, but the growth is not there. And without me trying to qualify what the numbers suggested, there are two or three names: Antique, Motilal, CLSA, HDFC Securities. All of them have come out with their views on ICICI Securities, and I use them simply because it seemed to be a performance which was lackluster compared to the kind of showing that Angel One has done. So HDFC Securities says that they maintain an ad on ICICI Securities with the revised target price of 740, so brought it down a bit. They have trimmed the target multiple to 20 times from 23 times to build in the tech handicap and competitive intensity. Cash volumes plunged about 10% sequentially, which according to them shows the dependence that ISEC has on cash volumes. And because they're losing the derivative market share every single quarter, it's a bit of an issue for them. They believe that the top line will remain cyclical and will face headwinds from the new age fintech brokers. But, at some point of time, viewers, and it's a strategy that companies follow. I'm not questioning. I'm gonna question Vijay Chandok today on what's happening within their brokerage. But as a stock, I'm saying, I said a few years ago this is Virat. Thank you for this plate. So this is the one that I was talking about. The new users addition, Grow added 2.43, Angel One 1.77. Look at ICICI Securities, 0.63. They added subscribers, of course, but not at the same pace as the leaders are apparently doing. The point I'm trying to make is at some point of time in the past, ISEC was the leading broker in terms of having number of subscribers. Not only are they losing the per month addition numbers, but the total number of subscribers. ISEC is now way behind Zerodha, Upstocks, Angel One, Grow, and the rest. So it just kind of tells you a story about what's happening. And I think that stock price consolidation, this is an interesting one. You look at what ICICI Securities has done over the last 12 odd months, right? Or 1 year. Now compare this, I think, to what Angel One has done. I'm asking maybe for a bit too much, but if we can get the Angel One stock price as well in the same 12-month scenario, I suspect that you will see a marked difference. Look at that. And that tells you a story about which way ISEC has gone versus how Angel One has performed. Anyways, I'm not recommending one or the other. I'm not recommending anything or anything. But yeah, I'm just bringing to you what the brokerages are saying. The other stocks in focus include Tata Elxsi, revenues up 7.3%, EBIT up 4.3%, EBIT margins at 30.1%, and PAT up 6%. Steady state performance, I think the 7% revenue growth is pretty impressive. EBIT margins correcting slightly, but that's happening to everything. The only problem, as I see with Tata Elxsi viewers, is the valuation. I think still trades at 70 times thereabouts, and it's a company in the right space. It's um, getting ready to do something with the Tata ecosystem on the EV side as well, reportedly. But uh, but the valuations remain very, very expensive. So good numbers. Maybe the stock reacts. Maybe it doesn't. If it doesn't react, it will be on account of the valuations. Really, it just had a tremendous last few days, weeks, months, years. Let's see if it continues. What could have a bit of an iffy morning is Glenmark Life Sciences. The revenue numbers seemed okay, but the EBITDA margins plunged really to 28.7 versus 36.4 YOY. You can look at QOQ as well, but largely the numbers seem very, very patchy. Let's see if this one reacts. And here's lastly, before we wrap up, like I said, the the auto space could look interesting. Now look at this UBS note on auto stocks. They say that TVS Motor, Mahindra and Mahindra, and Maruti are top picks. By the way, for Jeffries, TVS, Maruti, and Tata Motors are top picks. So TVS and Maruti feature in both the names today. They say that they see the highest upsides in all these three names. UBS sees the highest upsides in all these three names, given their attractive risk reward profiles. The key call, TVS Motors and M&M also stand out by virtue of the kind of margin execution that the companies apparently have done through the last 2 years amidst the commodity price inflation. All three stocks, according to UBS, also benefit from strong launch pipelines, led growth, and mix improvements, which should cushion cost pressures. Well, it would be interesting to see if they do. They believe that some imminent transactions in the financing arm and the TV and the electric vehicle subsidiary in TVS could lead to some more upsides as well for that stock in particular. Do watch out for these names; they could be active today. Lastly, why buy and hold is great for Warren Buffett. It's great for certain stocks. It's not a panacea for all kinds of stocks. And the Netflix 5-year chart is testimony to that. If you bought in a Netflix in 2017, you're barely keeping your head above the water. Frankly, if you bought it almost any time post March 2018, you're actually in the red. So as sexy as watching Netflix might be, and I don't have a Netflix account, but as amazing as watching Netflix might be, uh, investing into Netflix, believing that everybody's having Netflix, is a mug's game, and just by virtue of this chart, you should question the buy and hold, long-term buy and hold in every stock you have. Try and question it. I'm not saying get out of stocks or don't own them for years. Maybe if you own multiple examples in the Indian context. So I'm not saying that don't buy and hold stocks, but keep on questioning that strategy every single quarter with every single data point that every company releases, no matter how blue chip the company might be. Thanks so much for tuning in today. Stay safe. And if you're stepping out, of course, not necessarily stay masked up, but stay safe, because I just saw cases marginally moving on the rise. Hopefully, there's no wave in India. But yeah, it would be put in for all of us to at least take care of ourselves. So do stay safe.